Hey traders, let's take a moment to thank and feature one of our top sponsors, FX2 Funding. If you're looking to get funded, listen up. FX2 is offering traders the chance to trade with up to $200,000 in simulated capital and receive up to 85% of their results. If you're interested in getting started, use the link being dropped in the chat or the link down in the description below. If you pass the evaluation, you'll receive your feedback and gain access to your new account. FX2 allows traders access to a wide range of assets and allows traders to hold their trades over the weekend. FX2 is giving A1 Trading Show fans 15% off the evaluation fee if you use promo code A1Trading15. So if you'd like to learn more, again, use the link being dropped in the chat or the link down in the description below and use code A1Trading15 at checkout for a discount on any of their evaluations. Now back to the show.
Good morning, traders, to spooky themed NFP. Welcome back to another stream. If you are a regular viewer, it's good to have you here. Sorry, we were a minute or two late there getting in. We are back and jumping into some charts ahead of NFP, probably one of the biggest news numbers of the month. This is going to give us some insight, guys, into the job statistics out of the United States. We have about 10 minutes to prepare together in terms of charts and setups. With that said, I do want to start where probably most people are going to be interested to hear about. By the way, there's 380 of you guys. As we get started, show some love, hit that thumbs up button on the stream. It helps to get the word out there, get more people in here for the event. And yeah, should be an exciting day here in terms of markets. Volatility is expected to be high with this NFP number. And man, let's jump into this. I think this is probably like my 100th plus stream for NFP. I do it every single month. We cover the news together, and we are it's good to be back. Anyways, talking about the dollar first. Look at this, guys. Dollar weakness is coming in more so than might have been expected, at least by my side of things. I thought we'd see more of a bounce here off of the dollar index. We didn't get it. We look left, we do see support, but support has broken. And now, to the interesting, to the surprise of many, not only did we break the 38.2, which also lined up with support, we've also got this price now rejecting levels of what was support at 106.5. This could perhaps be a good early sign for the gold market if you are somebody who watches gold. And let me just do a real quick, let's get a pulse check in the audience, guys. What would you like me to look at here today? Would you guys like me to look at more dollar focused things? You want me to look at gold? You want me to look at NASDAQ, S&P, Dow, oil, whatever you guys want? Let me know. We'll try and get a little bit of a pulse check in the audience. I do see a lot of gold, of course, and we will be doing plenty of charts. Okay, so dollar index, like I said, coming down and looking weak this morning, though jobs numbers will trump all when it comes to directional bias on the day. I want to drop it down with you guys to the 1 hour chart on the DXY. This is, of course, the dollar index, and I want to show you where we are. Let's start fresh. In fact, what we're going to do is we're going to focus a little bit on the hourly here, and I want to show you in terms of bullish or bearish breakouts what we could perhaps expect going into this NFP event. Now, if we talk first for resistance points, the dollar index has, like I said, had an impressive kind of break to the downside. This candle right here marking kind of a little bit of a doji looking thing where it basically marked a level of resistance and sold off aggressively from there. We've now even broken somewhat through this level of support as well. And so as you guys watch the dollar index with me here for the NFP event, once things start getting going, once we get those jobs numbers and I guess the volatility is on, if you will, it will be interesting to see if the dollar index is able to break one way or the other. So real quick, NFP, right? It is the tracking of, sorry, I'm getting my words. It tracks jobs. It's NFP jobs, right? It's a job metric here in the United States. It shows employment change outside of just the farming industry, which can be quite volatile. Anyways, the point is the dollar strengthening here this morning will likely put pressure on gold to the downside. And if it were to weaken on weaker jobs numbers, likely the gold market would shoot up. This would also apply most likely to the NASDAQ, to the S&P, to the Dow, etc. Right? So if you're thinking indices, notice that if the dollar index drops, there's a good solid shot that we see some relief rally in the NASDAQ, etc. Now, in terms of currency pairs, I want to show you guys Euro USD. I have gotten stopped out of a Euro short that I tried here, but fortunately for me, it was a really small position ahead of NFP. I knew it was kind of a trade that could have gone against me, and that's why I kept my size really small with that one. In fact, the Euro is kind of an interesting chart because here was my thought process with it. We had resistance here, had a nice little downward trend, and I am still tentatively bearish on the Euro if we do get hot jobs numbers. Now, if we do not get hot jobs numbers, if we break out higher, then I may need to just kind of be on pause with this and just not trade the euro. But anyways, when it comes to some data here, I want to show you guys in terms of inflation, comparing the euro against the U.S. dollar. What you can see is this kind of olive green is the European inflation rate, and the blue is the U.S.'s inflation rate. And what we can see here, kind of in terms of inflation statistics, the euro has been higher. However, it had a pretty good drop from 5.2 to down to 4.3 in the last filing. Anyways, why are we talking about inflation? Well, jobs numbers, guys, are incredibly impactful. We have 6 minutes to go until the NFP event. Jobs numbers are incredibly impactful to the inflation study, which is why the Fed pays so close attention to job health in the United States. They actually want the labor market to cool off a little bit. And so today, as we get started here, getting closer to the number, what we've got in terms of employment change, we're expecting 171,000 jobs. This is less than the previous. And if we do get this number or less than that number, that would be a success for the Federal Reserve. What would that do? Well, it would probably cause some chill on the Fed, which might mean dollar comes down a little bit. You might get a pop on the NASDAQ. You might get a pop on gold. And if we get the opposite, if we get hot jobs numbers today, if the labor market stays incredibly strong, that dollar is going to pop again. And I would say, and I'm going to break it down to its simplest components. I would say that if we get hot jobs numbers today, guys, the dollar index, in my view, is probably a buy back up to the previous high. Now, that is my opinion. I'm not here stating, what you should do with your money by any means. This is not financial advice. I'm sharing my thoughts and opinions. If we get cool jobs numbers, though, things get kind of interesting. In that case, you get the breakout to the downside on the dollar index, and that could lead to some other things finally getting some relief rally that they may have needed. So if we take a look, for example, at the NASDAQ has just been getting beaten down recently, alongside others like the Dow, defensive stocks, and as well as the S&P 500. As we look at this range, I think we have one of the cleanest ranges here to talk about on the NASDAQ. If you trade the NAS, watch for this breakout. If this breakout occurs on perhaps some cooling jobs numbers, meaning the Fed's kind of getting what it wants, beautiful to look, in my opinion, at that continuation. That would be something I'm really interested in myself. If we finally start to see this NASDAQ catch a little bit of a bid. Same thing with the Dow. In fact, the Dow has been even more depressed with this downward, this push recently, barely off the lows. The NASDAQ had at least a better day or two off the lows, but same thing with the S&P 500, really under pressure. And should be interesting. Move the light off your chest. Thank you for that. I'm not sure what that was. It's like my headlamp is like wanting to have a spotlight on my, it's still kind of there. I don't know if we're going to fix it here. That's a little bit better. Anyways, let's take a look now at gold, guys. Gold, I know everybody is anticipating it, and we've got just about 4 minutes to go here before we get the numbers. Let me ask you guys real quick. We've got 700 people. Can you guys do me a quick favor? If you enjoy, if you're benefiting from these streams, take half a second, hit that thumbs up button on the stream. Let YouTube know that this is the sort of content you would like to see more of, if this is something, in fact, that is being helpful to you. Anyways, the gold market continues to push lower and barely, it just can't get a green candle on the daily chart. And this, guys, is a very, very essential component to the gold's next move, right? Because I want to show you something. We've been bearish on gold. The EDGEFINDER's algorithm has pretty much been bearish for weeks on gold. And thank goodness, because again, this would have been a tough one to be bullish on. It's just been on a straight shot to the downside. It picked up, it accelerated down to this level of 1819, 1820 range, this 1850 to 1820 range, really. It's kind of acting like support, but it's not a convincing level of support, I think, until you get some proof. What is the proof in the pudding? The proof in the pudding is if we get cool jobs numbers, this gold market starts looking like a buy, in my opinion. On the other side, if this jobs market is hot, guys, I want to talk about a setup. Okay. You might say that looks so oversold. It's got to bounce. Let me show you something. Gold buyers, gold sellers. Let me show you something. First of all, take a look at the retail trader. The retail trader is so positioned long on gold, and that has me really scared. Okay. If we know retail traders are buying the gold dip aggressively, look at this, guys. 77% of retail positioning, at least according to the data that we pull from a couple brokers and sites, 77% is on the long side. If you know that average amateur traders that typically lose money, they're all piling into longs on gold, that to me is a major red flag. Now, does that mean gold has to go down? No, it just means be super cautious. As we approach this NFP number, which is about a minute and 15 seconds away, I want you to understand that if this thing breaks lower, there is no reason why this now becomes a new level of resistance. And we could actually even see sellers stay strong and continue to squeeze the retail trader, which is very, very long. And by the way, guys, you know, we saw on the fundamentals, we saw the COT report show us that smart money has been selling gold in the recent filing. Take a look at this. You know, you gotta keep an eye on the COT data. It's really important stuff. The gold, right? Gold market minus 3.56 bearish flow. There's a big sell that came in on gold in the last filing. So as we approach this, just be very cautious. It doesn't necessarily mean it can't go up, but let's get now prepared for the release. And guys, don't go anywhere. We've got coverage for the event. I've got the numbers on the screen for you. We'll watch the spike. The US, let's put SPX 500 top right. Let's put dollar index bottom right. Let's put Euro USD bottom left. Guys, we've got our charts pulled up here. We got breaking news coming in. Guys, and we are moments away. And there it goes. The dollar index is up. Gold, there it goes. Gold initially. Ooh, this is starting out poorly. Let's take a look at the numbers, see if we have them in, guys. Jobs numbers are pending on Forex Factory. There it is. They just came in. We got unemployment rate coming down 5.5%, perhaps a bit weakening. I'm sorry, this is for CAD. CAD numbers did come in, both showing some cooling in the labor market, actually strengthening in the labor market for CAD. Take a look at non-farm. Oh my goodness, guys, that is dollar bullish right there, right then and there. I don't even need to see the other two numbers. Yes, they matter, but this number, that is incredibly dollar bullish. That is incredibly, incredibly dollar bullish. Is that what I wanted to happen? No, not necessarily. I have a lot of bullish options going on for indices. So ideally, it would have been nice to see some cooling numbers, but it doesn't matter what I want, guys. What matters is the market sees hot jobs numbers, and there's the breakout that we discussed moments ago. There it goes. Yet again, I mean, the EDGEFINDER has been calling for dollar bullishness. So this is not necessarily a surprise. What we see here is the dollar is popping through resistance at 106.5 with ease. And this is a huge number. This is a huge, huge number. We were expecting, guys, the labor market to cool. 171 was what was forecasted. We got 336. That's a lot more than expected. And this is going to scare the markets. Why is this going to scare the markets? Why is it going to? Because hot numbers means the Fed is going to have to continue to keep those interest rates elevated until the labor market cools. Now, we did get some unemployment tick up. We saw 3.8%, so this is creeping higher. But average hourly earnings, this is actually also kind of what the Fed wants. They want a little bit cooling on the wage raises, because of course that is inflationary. But this is incredibly inflationary. A huge number of people getting employed. This is bullish dollar, bearish gold, bearish indices, at least for now. And, again, EDGEFINDER, this is what the EDGEFINDER was calling for this morning. Bullish on dollar yen, CAD yen, which CAD yen probably flying, right, guys? CAD yen is probably flying off of this, I would imagine. Yeah, there goes CAD yen, dollar yen, CAD yen, the EDGEFINDER bullish across the board on dollar crosses. You take a look at Euro USD bearish setups, pound dollar bearish setups. The S&P, the Dow, the NASDAQ all have been bearish. So the Edge Finder has been very correct about this initial move. Let's see if it is going to persist. Again, this thing has just been so spot on in the last few weeks. We've maintained a dollar bullish thesis with this. I do want to say, when you have gold, let's pull up gold. Let's get to the gold market. Look at this, guys. Again, what I was saying moments before this happened. Be so careful as we approach yet again this 1813 mark. In my opinion, this level looks wobbly. This level looks really, really wobbly with these jobs numbers. Gold to me looks like it is probably headed for 1800 as it does continue. This number is the icing on the cake to the already incredibly bearish story that gold is undergoing. China's slowdown. Now we've got hot jobs numbers to complement all of it. This is not what the market ordered for gold bulls. This is incredibly bearish. Now, can it bounce? Maybe it does. But my opinion, path of least resistance is down on gold until further notice. But we're still at support. So we'll have to see if this level is able to break or not. Okay. So gold is still a bearish signal out of this. And I imagine that in moments, the labor market statistics for gold are going to pump even more bearish. So with this latest figure, we have, again, jobs numbers coming down. Heating up. That is going to bring gold tumbling down most likely. A quick look across the board here. We got NASDAQ down 1.22%. The S&P down 0.96%. US 30 minus 0.67%. US 30 doing the best of the worst, I guess, is what you could say. Taking a little bit of a beating here. And again, it's like the indices cannot catch a break. This is not what they wanted to see. Risk assets are under heavy pressure with this because risk assets don't like higher interest rates, and higher interest rates are not going anywhere if this labor market can't crack. This labor market has to crack for that inflation figure to come down to where the Fed wants it to be. They need the labor market to crack. We're going to have to wait till next month. That's really what it comes down to, and that is why the impact is so strong. Okay, so guys, we are staying bullish dollar, at least on the Edge Finder. If you're an Edge Finder user, I've got dollar bullishness still on the screen for us. Take a look at the fundamentals. We'll check that in just a moment, actually. Let's come back to that. Smart Money Tracker, here's the thing. In terms of gold, we saw this. The S&P, the gold indication here, bearish sell setups this week, and we still see that kind of persisting. I do want to say, guys, if you're somebody who wants access to the Edge Finder, I should make mention to this. We are currently doing our NFP sale just for this live stream. And if you're somebody who watches the streams regularly and you would like access to our software, we're a software company out of Atlanta, Georgia. There's about 10 of us total. And if you would like a copy of our tool for the biggest discount that we're doing all month, NFP stream sale discount is online right now. Here's how you can get access. Link in the chat, and it will take you to a location where you can speak with one of our customer representatives. Our customer support team is on the line, and they're going to give you, here it comes, 45% off for the NFP stream only. This is a very short-term sale that we are doing for NFP stream viewers. If you're somebody who supports the stream, if you're here every day and you've been thinking about getting a copy of the Edge Finder, here is your chance, guys, to get 45% off the Edge Finder while the stream is on. This is an NFP only sale. Let me show you what you do. It's really easy. You click the link, click the direct message link, and when you do so, it's in the chat. So click the link in the chat. This is what it looks like. It's right below me here. Click this link, click chat now, and click, here it is. It is up and ready for you only during the NFP stream sale. Edge Finder, 45% off NFP sale. It's ending soon. Literally, it is a limited offer. We'll hand out a couple copies of the Edge Finder for super low prices, and then it is going back to its usual price. And with full transparency, we are planning to raise the price of the Edge Finder in the coming weeks. So please be aware. We're not trying to hide that. We're not trying to sneak that in there. We are being transparent. We are raising the price of the Edge Finder. So get yours 45% off before that goes up. All right, guys. So here's the thing. When it comes to smart money is still very bullish overall on gold. And this is where people get confused. They say, well, gold is still bullish from the Edge Finder COT data, right? Yes. But here's the problem. In the latest filing, they've maintained a pretty bearish stance. They've sold. And so as we get this jobs number, which is incredibly hot, right? 336,000 jobs created compared to the 171,000 that were expected is absolutely the wrong direction for what the Fed wanted to see. They do not want hot labor markets because it is incredibly inflationary. If everybody's getting jobs, they're going to go spend money like crazy, and that's going to continue to drive inflation onwards and upwards. So for now, again, gold looks bearish as we test the lower limits of this 1813 mark. This is not something I'm buying. I'm definitely, for now, I'm going to stay on the sidelines with the indices. I'm not short, I'm not long. I do have some options plays that I'm doing, but that is kind of different than my momentum trading. In terms of trades, Euro USD, I might look for a chance to retry this one because I did get stopped out and I'm feeling kind of dumb about that now, but hey, you know what? The markets never fail to make everyone feel dumb at some point or another. Pound pulls back 61.8%, did get hit, tested slightly higher than it, and then proceeded to drop here on NFP. Pound USD looks bearish. Euro USD looks bearish. Again, we're getting these signals from the EDGEFINDER. We're still bearish fundamentally and technically. The technicals are pretty obvious. I think everyone here understands how to draw support, resistance, trend lines, fibs, etc. That stuff is relatively easy. Where it gets tricky is, what is this really telling us? What is the story really telling us? This NFP jobs number, it's telling us hot labor market, tells us strong dollar, tells us yields may continue to stay elevated. This is groundbreaking stuff because this is exactly what the Federal Reserve did not want to see. So again, keeping that in mind, we are going to maintain the bearish bias that we already had on so many charts. The NASDAQ, the Euro, the pound, the S&P, the Australian dollar, the FTSE, the gold market. We've just been super bearish on things, and it's served us well to do so, because really the only thing that the EDGEFINDER's uniformly bullish on right now is, and has been for a few weeks, the US dollar. Do I like that it's the US dollar that we're bullish on? No, but I don't trade based off of what I want to buy, what I want to sell. I trade off of what my system, what the algorithm, what the EDGEFINDER's components are pointing towards. This is how I find every trade. And I am not just selling that. I mean, I'm not just saying that because I'm selling copies of this thing. I genuinely mean this is a tool that is on another level. We've worked really hard to make it the way that it is, and it helps traders incorporate the fundamentals. Reason I'm pointing that out, I do want to say one more time in case you didn't hear it, 45% off the EDGEFINDER is ending soon. We are doing an NFP only stream sale. And then I made it clear transparently, we are considering price raises in the coming weeks. So if you want a copy, I'm telling you, I'm not just trying to throw that out there. I promise. We are considering repricing options. And with that price increase, this is probably going to be one of the last times to get it this low with that 45% off sale. So send us a direct message, click that link right here. It'll take you to the live chat where you can get access. Guys, we've got the jobs numbers. In just a moment, we're going to bring in some help, some fundamental help. We got both Ivan and Frank in the room here getting ready for some response here. Real quick, we're going to thank. Just go. Oh, there I'm back. I don't know what just happened. I just blanked. We're coming right back with Frank and Ivan in just a second after this. Check it out.
Attention A1 Trading Show fans. If you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
We're joined now by the two analysts here at A1 Trading, Frank, Ivan, and myself. I guess that makes three of us. My counting is a little bit off. Hey, Ivan, how's it going?
Doing good. Doing all right.
Ivan, what's your reaction to this jobs number that just dropped?
Holy guacamole. That was not expected.
Yes, exactly. No, I would agree. I mean, we just for those who are just tuning in, we'll recap the numbers we had in terms of employment change. We had 171,000 that were expected. We got 336,000. That is a really hot month of hiring. Average hourly earnings were slightly less than expected, and unemployment rate did tick up to 3.8%. So Ivan, walk me through. Does this get you dollar bullish again?
Yeah. There's no doubt. There's nowhere to hide.
Yeah.
There is
No,
nowhere to hide.
I mean, it's hard to deny, this is one of the biggest reports of the month. And to see this jobs number stay so hot, regardless of, interest rates being elevated and the higher for longer, all this does is it calls into question, well, how much longer is that interest rate going to remain elevated? So I guess walk me through, Ivan, in terms of biases. What does this direct you to the most? Are you looking at a certain currency pair? If you'd like to share your screen, I see you've got something pulled up that you could share with us as well if you'd like.
Well, I'm just showing the actual report. Can't do whatever. So what the labor and statistics says, that it was an increase in government, healthcare, professional, scientific, and technical services and social assistance, and especially with leisure was the biggest one that added 96,000. So I don't know what Disney has pulled off lately, but yeah.
Yeah,
bit of kick there, but now also it leads to shorting dollar pairs. Right now it's very low, and I saw that you were stopped out, and I think that was very early, wasn't it? Well,
yeah. In hindsight, Ivan, I wish I shorted right at the top, but of course, the fortunate side for me is I took a really small trade, and I've been doing this lately. Frank and I have talked about this. I oftentimes take 2 or 3 times to really get into the trade that I like, because I've really got pretty tight stops. So unfortunately, it broke through the 618, took me out, proceeded to go on without me, but I'll get the next one.
Okay. So this should have been in a mentorship class today then, because I'm not saying that you sell there, but people have sold them like that is not where we sell. This is not where we sell, and we should sell at least either the lows of that one or the lows of this one, and this is the aggressive one. This is where you are allowed first time to be thinking about it in my standards. But okay, but fair enough. So it leads me to CAD yen actually. Why does it lead me to CAD yen? Or dollar yen for that matter? Because we are still dollar bullish, yen bearish. Well, there has been a bit of a volatility lately, but this is the best trade out there. Carry trade and fundamental trade. That's where it leads.
Fair enough. Yeah, no, that makes sense. And I think with the dollar yen, you've got a really interesting added dynamic with the Bank of Japan, and they're threatening for intervention. I've been pretty vocal. I think that 150 breakout, if it were to occur, would be a major trigger to the upside even.
150?
Yeah, because, if 150 were to break and confidence in the Bank of Japan's ability to really suppress the exchange rate was called into question, I think the popular trade is to be short dollar yen at 150. And I think that if that popular trade unwinds, it could be similar to the S&B situation with the the Euro Swiss back in early 2015, which caused, major brokerages to shut down. It's just something to think about.
Well, why did they shut down though? That was their own wrongdoings, wasn't it? FXCM.
Yeah, and then Alpara. You had several brokerages that went down, and it was a lot of due to the fact that, again, they were taking the other side. The liquidity simply wasn't there all of a sudden. They had all the positions of the clients that were long. There was like moments or in the hours leading up to the unwinding, Euro CHF, the retail trader actually was incredibly long on. And with that, if the retail traders are all long, the brokers are the ones kind of that get stuck in situations where they have to buy it back from them.
When you don't put orders into the real market, weird things happens, like bankruptcy.
Yeah, no, you're right. You're very right. So I want to go to Frank too on this. Frank, we had jobs numbers again, the dollar 106.85 almost being printed. That is a major pop. And again, it's looking so incredibly daunting for anybody who's dollar bearish. What do you think about this? And do you have any charts that you're kind of gravitating towards?
Yeah, so I guess that kind of reignites a bullet or bearish view on gold again. I've been bearish on it for a while, but I was hoping that seeing ADP and unemployment claims, um, sort of that were pointing towards less jobs added, would eventually lead to NFP showing us some relief, but obviously that wasn't the case. So I don't know if ADP is, I mean, obviously it's not a very trustworthy indicator, but I think it's when looking at those numbers, it's probably good to just ignore it entirely and to not focus on what ADP is saying, because it's been consistently wrong. So just whatever you see on that side, just I guess take it with a grain of salt, wait for NFP to actually come out. But I'm still hovering in my S&P long, but if it breaks lows from yesterday or the day before, then I'll be stopped out. But otherwise, like, it's hard to tell because unemployment rate also went up. So just some mixed data here. I'm not really sure exactly what to think, other than these indices, gold, they're at these significant levels of support. So until that gets broken, it's hard to say that I want to, sort of go into a bull or bearish trade on any of these. So I don't know. I'm looking at indices, gold, probably some USD pairs, but after today's NFP, it wasn't very promising. So
I think one thing to add there, Frank, when it comes to the unemployment rate, I know that that's probably going to be a little bit of a confusing figure for people. So I'll show you guys this really quick just to give you the simplest explanation I can on that. The reason suggested for why this number, unemployment rate, can go up while at the same time way more people than expected can be hired. The reason for that, the hidden component that you can't really see very easily, is the participation rate in the labor force. If many more people are looking for jobs, then many more people are going to also file for unemployment, and many more people are also going to get jobs. So just something to think about. When you see this number, I know this could be very confusing to people. This does show that more people are proportionally to the people looking for jobs unemployed. But still, this number, I think, kind of trumps it today, obviously, with the dollar shooting up so much. The 336,000 jobs, I mean, that is a lot of jobs created compared to the 171. And again, I think all of us, all three of us, would have liked to get some cooler jobs numbers finally, because the somewhat frustrating thing about this is that we don't really get a major labor market. I mean, this is it for the month. For the month of September, of course, we get our labor statistics the first Friday of October. And it's one of those things. I think the market is picking up on that. We do have CPI around the corner. That's another one that could be, something to consider. But with this NFP coming in so hot, it just beckons the question, how long is this situation going to go where the Fed is, faced with a really strong labor market, which is going to basically plateau how low inflation can get. I mean, that labor market has been said over and over. They need that to crack in order for inflation to really get down to that 2% target. It is very rare. I don't really see a situation in which they can get down to their number without the labor market easing in some way. So that is probably why there's so much weight being carried in this move. Again, you have a major push to the downside on the NASDAQ, all the indices down, S&P, Dow. Again, I will say one redeeming factor for this is we still do have, seasonality is expected to pick up in Q4, and we do have CPI numbers around the corner. So it's not necessarily, this is just all over for the indices, because look, we've still got support looking left. If you're really bullish, if you think inflation could still cool, there are some disinflation stories still intact. And if we start to get that bounce, if we start to get that push off the lows, this could be a wonderful buying opportunity for the remainder of the year. But I think for traders right now, short term, this price action is looking a little bit tough in my view. You take a look at gold, to your point, Frank. I mean, this same concept is what I was thinking as well. This reopens the door for possible gold shorts upon a breakout and retest of this support level that buyers have been holding on to for dear life. I mean, this is 1813. It's like has been just trying so hard to get a bid. And even with some dollar weakness coming in, gold has not been able to catch any bounce whatsoever for the most part. So it's interesting to watch on that front. Ivan, what else are you watching? Again, do you think that there's a chance that I know the indices are kind of an interesting story right now. Do you think there's any chance that we start to get possibly like a double bottom on some of these oversold entities like the NASDAQ and the S&P?
You can only hope. You can only hope. Right now, it doesn't look like a lot of hope. Right now, it looks like Jesus takes the wheel, to be honest. But holding on for dear life. Because if you look at my entry, which is around here, which I thought was going to be the reversal, it's not the reversal. So I don't know. You tell me. Can it?
Yeah.
It should be, but this is not a reaction. This is not what I wanted to see. So it's kind of like, okay, maybe we make an even new lower low and then we rewind it back up again. But this is a trade. Come on, it's not that bad.
Yeah, no, it's one of those things that, like I said, I think all of us were hopeful that we would get some cooling jobs numbers, but again, sometimes the market just does not care about what you hope and what you want. And at the end of the day, I think if you start pulling back the picture, we've still had a really strong year for the NASDAQ. You've still had a really great year for the S&P 500, all things considered. But you've got a chart pulled up. I want to stay with you, Ivan, there. We'll go back to your chart. The 10-year. Talk to us about this. What does this entail for dollar, for indices? Again, of course, this is bond yields that you're talking about.
It's the highway to 5%. We had a drop. We had a little pullback from 4.8 something. Now it's back up again. It entails that dollar strength. It entails that market is still going to see higher inflation. The risk of buying American bonds are increasing. It leads to gold weakness and allocation going into at least more risk off environment. So it entails dollar strength and everything else not going where I wanted to go.
So do you think, Ivan, the 5% 10-year yield, do you think at this point it's starting to become more and more inevitable that we see that number come in? I'm going to come to Frank with the same question in a minute, but what do you think, Ivan?
Yeah, absolutely.
Okay. I mean, you could see the momentum's clearly favoring the bulls. It does not show signs of slowing, at least right now. And these are highs. These are highs of the year for the 10-year, 5%, that big handle. Let's just hope for the sake of risk on returning at any time soon that 5% becomes a ceiling. Frank, what do you think? 10-year approaching that 5%. And by the way, guys, people in the audience, if you think bonds are not relevant or not important, just so you know, this is, if you trade currencies, you trade bond yields. Bond yields are in direct correlation in many ways to the US dollar. So if you trade gold, if you trade the euro dollar, the pound dollar, you trade bond yields essentially. Anyways, Frank, what do you think? US 10-year headed to 5%, or and if it does, I'll add one layer to it. Is 5% a possible top for a while, or do you think 5% is a checkpoint?
Oh yeah, I would say it's very likely. Just the fact that the Fed, they talk about no signs of cutting anytime soon, and with jobs data like what I got pulled up right now, it's hard to say like if this is the ceiling or not. I mean, obviously I don't know, But all I know is as long as they're going up, we're going to have to stay sort of cautious on the side of being risk off or risk on. But what I've noticed here on the NFP sort of change for the past year or so, um, it's been complying for the most part. We've seen these like large spikes in beats and expectations, but overall the number of jobs being added is going down. Um, so I don't know. It's almost like the spikes are even getting lesser and lesser over time. So I don't know. The jobs market is on and off, I guess, but it is still in a way complying to what the Fed wants. So we'll have to see over time, are jobs going to start to dwindle more? And then with that, is inflation going to sort of get down to their target? But I think until then, bonds are going to keep rising. The 2 year has been above 5% for some time. And this whole week, it's been sort of trailing downwards. And so that's where we all got this idea that, okay, bonds are starting to cool off. NFP might come in cooler, but that wasn't the case this time. And so I think even with bond yields rising, the 10 years probably likely going to go higher, maybe 5%. The other question is where's the 2 year going to go? Because the 2 years is still higher than the 10 year right now.
Currently trading 5.12% on the 2 year. And yeah, Frank, just a side note, we got to get that chart that you've got there. Let's get a variation of that on the EDGEFINDER because that would be so useful. I was just thinking about that because as you point out, you've got the tick up in jobs this month, and perhaps one light at the end of the tunnel that you could suggest is exactly what you said. If you put a moving average over the jobs data here, you're probably feeling a lot better than just looking at today's spike alone. Yes, today's spike is an impressive jobs push, but it also is fair to probably say there's probably a lot of preemptive hiring going on by major corporations as we enter into Q4, which is known by companies to be, heck, every company that is retail facing, they usually do, holidays, events and things like that. So it is a seasonally strong portion of the year. So
And
anyways, yeah,
there's a sorry,
go ahead.
there's
No,
a
go ahead.
lot of inside like these hirings, there's also a lot of strikes going on, and there's a good bit of layoffs. I know in the tech sector there was a good bit of job cuts, and just recently we saw Kaiser Permanente had like 75,000 workers on strike, which was like the largest strike in U.S. history. So it's hard to tell, like, are these jobs like how temporary or permanent are they? People are getting in and out of jobs right now, and a lot of people that have jobs are on strike. So how much are we really seeing output wise? GDP showed us, a decline. So, seeing jobs go down over time with like occasional spikes doesn't look too bad for me. It does look like the jobs market is cooling off, but I mean, we'll just have to
No, good
see.
stuff. Thanks for the breakdown on that, Frank. And I think again that chart does show a little bit of a optimism. What would be really concerning would be if next CPI, NFP, we get another strong report that would just kind of break the trend here. But again, this trend is I would say not necessarily broken. And what they usually say about economic data is try and look at like a 3-month moving average. Don't always look at just the number itself, because yes, that can cause a spike, but where things trend will likely follow the trend down the higher time frames as well. In this case, we're talking month to month data. Anyways, yeah, I want to thank both of you guys for stopping by to help out with the NFP stuff. Before we go, let me just say, Ivan and Frank, you can find both of them inside of our Discord channel. Ivan does coaching webinars for members inside of our Discord community. He also does one-on-one coaching, and he also has a YouTube channel. So if you guys would like to check out Ivan, find more of his content as we all travel through this tough trading time, here's how you can do so. We'll drop the link in the chat. Here is Ivan's his channel. You can find him there. And like I said, you can also shoot him a message on Discord. If you're one of our members inside of our Discord community, you can find Ivan, shoot him a message, ask him about coaching if that's something you're interested in. And again, shout out to Ivan for the, I think all of us really for trying to stay transparent in a tough trading environment. So Ivan, thank you for coming on the show.
Thank you very much for having me.
All right. See you, Ivan. Frank, same thing. Thanks for the commentary. Great points about the job data. And like I said, I think we should get those that chart employment change month over month on the EDGEFINDER. We'll do some public brainstorming. I think that'd be really cool to secretly work on the EDGEFINDER in the future.
Yeah,
that'd be
I agree.
Awesome. Cool. Thanks, Frank, for coming on. And we'll see you on the next one as well.
Thanks.
See ya. And again, guys, back to gold for a moment. We are still hovering just at the lows, 1813 printing with a low of about 1810. Oh my goodness. That is so wild to see gold back in the 1810s. I mean, I think I've said this. I think gold to 1800 is not out of the question. And what scares me about 1800 is that is starting to break out of this major support zone off of the daily chart. Now, if you're bullish on gold and you're hearing me say this and you're like, Nick, every time you say that, it hurts me because I'm bullish on gold. I am not here to try and, bully or harass anybody or make anybody feel bad about what they're trading. I'm here simply trying to share, my forecast, my bias, my ideas as an analyst here on YouTube. We are trying to do something here on YouTube. If you can't tell, we're trying to make a kind of a trader-friendly show to go through setups, ideas, fundamental and technical analysis, as well as sentiment. And if you enjoy what we're putting on here, I can just tell you, we work really, really hard to get these shows put together. We have a team of people that are involved in this. And if you would like to support us, here's 2 ways you can do it. Number one is a free way. You can hit the subscribe button, hit the thumbs up button, and you can support our guests by also doing the same on their shows, like Ivan. Frank, he doesn't really have a channel. This is his channel too. The Trader Nick and A1 trading channels. Frank and I, he's more of our readable content guy. He manages our Telegram channels, etc. So I guess another free thing you could do is you could join our Telegram chat, and you can also join our Discord. We'll link those in the chat now. The other thing, if you would really like to support us, get your hands on a copy of our market data software called the A1 EDGEFINDER Pro. If you don't have a copy of this tool, it helps us by looking at tons of fundamental analysis and generating ideas based on all of this data. This software is looking at the commitment of traders data, retail sentiment, seasonality, trend, GDP, inflation, labor markets, and interest rates. And it's factoring all of this stuff in automatically. Now, what value does that add to you? Well, I'll tell you really simply. You cannot look at all of this data discretionally by yourself, hand-drawn every single day. It would take you 8 hours a day to do what the EDGEFINDER automatically does. The point I'm showing you that and why that is an important factor is because we've worked incredibly hard to make our data the way it is. It pulls in tons of resources from all over the internet, and it sources it all in here. It collects it, it harvests it, it refines it, and then it generates biases based on it. So you've got the commitment of traders data, the retail sentiment, seasonal data, trend readings, GDP statistics, inflation, the labor market statistics like we got today, interest rates, all under one roof, data organized for you and even interpreted in a simple scoring system. If you'd like more information, here's what I want to say to you. We currently are ending our stream here today. And with this stream, all stream long, we have been doing a 45% off EDGEFINDER sale. Now, I'm going to, if you are not interested in the EDGEFINDER, I don't mind if you say goodbye and head out. But I just want to let you guys know that right now, if you are somebody who has been thinking about the EDGEFINDER, here is something for you to consider. We are planning, we've been transparent about this. We are planning to raise our prices. We have so many features and a lot of overhead goes into building and maintaining software like this. We do plan on raise our prices. And I'm not just saying that, we do have plans to raise our prices in the coming weeks to months. And I do want to say that if you have been thinking about getting a copy of the EDGEFINDER, this is probably the last chance to get it for this price today. 45% off during the stream sale. Here's how you get it. In the description, as well as in the chat right now, you have a link to connect with a support representative here at A1 Trading. I am genuinely being serious. This is the last chance before our prices go up, and the prices are again, we are repricing some things on the EDGEFINDER. This is your chance to get it for 45% off. Click this link. If you want a copy, it's pretty much now or never if you want it for this discount. So take advantage. Again, as this stream sale ends, if you message in right now, we'll honor you the offer. But after the stream ends, shortly after, the prices will be going back up. So click chat now, click EDGEFINDER 45% off NFP sale. We're doing this again for NFP only. Click that link, message someone, take advantage. And again, I know I keep repeating myself, but I'm just trying to make sure. We always have people who are like, I missed it. Can I still get it? And we have to close the door at some point. So again, 45% off, take advantage. If you want a copy, if you're so Jesse, that's awesome to hear that you got a copy or that you're getting a copy. I'm glad we could set people up with a copy. I think a couple people went ahead and picked up their copy here today. So again, we're excited to have users. And I do want to ask a favor. If you're somebody who just got it, some people did in the chat here today. If you are somebody who got it, please come back to the shows, message in, let your representative that you're working with know that you would give us your feedback. We are constantly working to improve this. We're a small business. There's only 10 of us total. So, we're a small software company in Atlanta, Georgia, and we love your feedback. We build our next features on this software based off what the community says they want more of. We are very, very closely listening to our audience. We value what you guys have to say. And I should say also, you get this copy. It's not a yearly subscription. You pay once, you get what you see, and you have access. You have access, and we continue to work month over month, maintaining, updating, and improving the software on your behalf. So again, it's a deal. I will just say this. I do not believe in selling something that you wouldn't buy yourself. This is worth every penny. I'll tell you why. Our company has spent way more than what an individual purchases for it on building it. It's been a pretty much crowdsourced though, because we've brought this product to life. We've made it available to everyone. And with the funds that people spend money to purchase the tool, we use a tremendous amount of that money. We shoot it back into the project and we build better tools. Our goal is to get this thing better and better and better and continuously improve it on behalf of our viewers, our audience, and our customers who use the software. So again, there you go. Thank you guys very much for tuning into today's NFP stream. It was a heck of a time. And like I said, last chance, message in if you haven't already. As the stream closes, you can connect with a real person on our team to get yourself a copy. Thank you guys. Have a wonderful rest of your day. See ya.
And that concludes today's show. Our goal at A1 Trading is to give you the latest market coverage through our daily videos and articles. If you like what you see, make sure to subscribe for more. Be sure to join our Telegram, where we host trading competitions, share free market analysis with trade setups, and have exclusive discounts to our products. Our Telegram is free to join. The link is in the description. See you all next time.